Hi, everyone. My name is Jeff Praissman with Interactive Brokers. Welcome back to our mid-market update. Scott Bauer from Prosper Trading. Hey, Scott, how are you?
Jeff, I am great. Enjoying the summer. How about you?
It's nice to finally get the summer going. I can't believe it's actually starting. I feel like winter would never end sometimes. But we're happy to have you here midweek to discuss the previous 5 days and the upcoming 5 days. Without further delay, Scott, another wild week in the market. Kind of overall bullish movement. We've had some anticipation leading up to last Friday with potential additions to the S&P 500, and those markets were running up leading up to it.
You
But
sure
the
were.
news but the news came out Friday night that there's no new stocks will be added. So there's a little bit of fallback in their names, but kind of want to ask you, why is it considered a positive to be added to the S&P?
Sure. Once a company is actually part of the S&P 500, it puts them in a much different class. You typically see a jump in the share price, but longer term here, the reason is really quite simple because S&P index fund managers who are benchmarking the S&P, they must buy that stock. Okay, if that's going to be included in their results, they have to buy that stock. Obviously, that raises interest, helps push the stock price higher. With last week and some of the word that was out there, Robinhood, HOOD, was one of the stocks that was highly anticipated that would be added in, and it ran up into Friday and then sold off when it was not included in. Being in the S&P 500 is not just a badge of honor, which it is a big honor, but it is from a fundamental standpoint, these fund managers have to buy that stock.
Got it. Got it. So there's some very fundamental and practical reasons why the stock is considered a positive.
Exactly.
Switching gears a little bit, the Fed's going to be announcing their next interest rate decision next week on June 18th. When, if it hasn't already done, when does the market start reacting to the expected result? In this case, I'm hearing that they're expecting no change in rates.
Correct. And the market is already pricing that in. In fact, I think the CME Fed Watch tool basically is at 100% for no change in rates for the next meeting. So the question now becomes, especially after some recent inflation data, what about July? What about the September meeting? Because we've seen over the last several weeks, the way that rates have gone, we've seen some people saying, there's not going to be any cuts this year. And now after the recent inflation news, okay, maybe September is back on the table. So I think for July, it's a very small probability. It's maybe 15 to 20%, but September is ramping up. So we're seeing markets trade like that. We're seeing the treasury markets trade like that. And I would say the market does a pretty good job of handicapping what the Fed may or may not do.
Got it. So it's baked in each time where it's, what the market's expecting. And how has volatility reacted over the past week? And what do you expect for the next week coming up?
I know it's summer trade right now, and typically over the summer, we do see depressed volatility. But I think in this environment, Jeff, vol is too cheap. We're seeing the VIX under 17 now. As we speak, it's 16 and change, and it's the lowest it's been in several months. Now, yes, volumes are a little bit lighter now. We do have some of that summer trade, but I really think that vol is too cheap, not just in the VIX, but a lot of individual equities at all that are still moving pretty sizably on a daily basis. Take a Tesla, for instance, even a Microsoft. Some of these stocks, to me, volatility is way too inexpensive. And this is a time as a trader where you say, buy them when you can and not when you have to, meaning when vol is cheap and maybe it's on sale, buy that protection.
Got it. Makes sense. And this overall kind of bullish movement we've experienced over the last couple of weeks, really. But are there any we just got done earnings season a little while ago. Are there any sectors in particular pulling the market up, or has it been spread out evenly, or is anything standing out over the others?
It is pretty spread out, but you really have to look at the Mag 7 that have really led this comeback in the marketplace. And the NVIDIAs, we got Microsoft trading at all-time high. Google, even with some of the antitrust stuff going on, has been really strong. So Mag 7 stocks have been really solid. I like the financials, quite frankly. We've seen Goldman Sachs, JP Morgan making some big moves back and forth here. And I just think that as some of the market gets back to normal trade, what do I mean by that? Just where we're not maybe anticipating a tweet every day, even though that risk is still there. we're going to see, in my opinion, some of these banks really start kicking in on the M&A side, and that's going to be reflective in their results later on in the year.
Once these banks feel a little bit better about the overall economic situation, they'll feel a little bit more empowered to go about their business and not be worried about everything changing so quickly. Scott, this has been great. Love having you in our studio. For our listeners, you can find more from Scott on our website under education, as well as at prospertrading.com. And Scott, until next time, look forward to hearing from you.
Thanks, Jeff. Appreciate it as always.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances, and, as necessary, seek professional advice.